Hey everybody, Mark Yagi. Welcome back to the channel. So I have this friend, let's call her Marie, and she has been talking to me about the market for the last couple of years, and she doesn't really know what's going on in the market, and she thinks she does. And this is the problem. We get this Nostradamus complex, and she's been saying, the market's going to crash, the market's going to crash, the market's going to crash, and she put all her money in CDs. And I'm like, that's not a good move. First of all, CDs, while they might be paying 5%, which is better than the 2% they were paying years ago, the market's gone up about 75% since the last couple of years. And so I'm going to tell you why that's a big risk. I'm also going to talk about what this crash is that we have coming, right? I think there's a crash coming, and she did too. The problem is she's got it all wrong in the way the crash is going to come, and I'm going to explain that here. So I'm going to give you 5 tips to prepare for that, but I'm going to show you first the data of why I feel like this is something that you should know about. So this first chart I'm going to show you is from the Federal Reserve System, and it's basically showing you a seasonally adjusted amount of M2 money supply. Now, M2 is the amount of money that is pumped into the system. You can see that according to the Fed, it's been less and less and less. Now, I believe that they're lying to us because there's been more and more money pumped into the system because we're spending it like drunken sailors right now. We're sending it to Ukraine. We're sending it to Israel. We're sending it to all these people that are coming across the border, and we're spending money like crazy. So the amount of money that's actually going into the system is higher, but I just think they're hiding it because they're running it through the Treasury rather than through the Fed. Nonetheless, this is their data. We got to look at it, but you can see the important part of this is that it's rising again. Right. So the bottom, let's call it the last, year and a half, you could see that the money supply is rising again. And it's going to have to keep rising, as I'll talk to you about here further. Now, this next one is just amazing. This is why it has to keep rising. So it took us 221 years for our US debt to reach 12 trillion. And just in the last 4 years, we've added 12 trillion, the same amount, right, in just 4 years. Right. So we are obviously spending way more money than we even should be spending. Right. And where does that translate? It translates into the cost of your car, the cost of your rent or mortgage, the cost of your insurance, the cost of your, your general cost of living, the cost of your eggs, which somebody made fun of me because I brought up the concept of eggs, which eggs is just a placeholder for any other item that you are spending money on. It's gone up, right? Unless you're buying like big TVs or something. They've come down in price. But how many big TVs do you buy a year, right? So we are printing new debt. And the funny thing is nobody's really talking about it, certainly not the politicians. So we're putting on tons of new debt, and we're using a lot of that to replace the old debt. And the new debt costs more than some of the old debt. It's a crazy thing. We got it all backwards right now. So I'm going to show you a few charts here. This is the treasuries. Notice the treasuries. They're supposed to be the safest, the safest investment that you can have, right? It's backed by the full faith and credit. Well, I don't know if it's that safe when the treasuries hit a peak of 180 and now they're under 100, they're around 90. They're about half. So if you're getting 4%, but you lost, 50%, that's not so good. So treasuries, which is an indicator of people's faith in our government, it's falling. So treasuries are falling. That's number one. Well, I don't know, number 2, number 3, whatever it is. Take a look at this chart. This is your S&P 500. Because there's so much money coming into the market, that money's got to go somewhere, right? A lot of people can't, pay their bills, so their bills are the first thing that they pay. But people that have extra money left over, like the millionaires and billionaires and people that are making 6 figures, they are putting money into the market. Well, that's going to continue, right? Because we're making more assets. That assets are going to go into people's pockets. The first assets are, going to pay the bills, but the remaining assets are going to go into investments. And that's why you're going to see investments go up. Hidden secret here that I'm going to tell you about. All right. The next one, let's take a look at it. This is crude oil. That crude oil is telling us, this is a daily chart, crude oil is telling us that we're entering a recession when goods aren't moving around as much, when oil is getting cheaper because demand is getting lower. Either we're traveling less or we're moving goods around less or both. We are recessionary. Oil is a recessionary indicator. And the people that trade oil know a lot more than we do about what's coming. So look at that chart and notice that big red line, it's coming down. The next one is the Philadelphia Housing Index. Now, if you've been in the housing or if you've been living in a house, right, you know that the price of housing, the cost of housing, the cost of living has gone up. That's the big red line there. And so it's continuing to melt up as more and more assets come into the market. More people are taking the extra money they're making and they're putting it into assets. Well, assets aren't increasing in value. Like the roof that I have over my head has still got the same value. It still protects me from the rain from 5 years ago, but people are willing to pay more for that because the value of the dollar is going down because we're printing so much more of it. All right. I think you get all that, but now I'm going to tell you how this kind of applies to you. This is a 30-year fixed rate mortgage. Now notice that it was pretty flat here for a long time, back up until 2001, and then it just shot straight up, and then it came back down. But now on the right side of the chart, it's actually creeping back up again. I don't think we're going to get rates at 0% ever again, because I think the Fed is printing way too much money to be able to do that, and that's inflationary. And you're seeing the markets react to that. I just showed you the Treasury. The Treasuries are coming down. That's because interest rates are going up, whether the Fed is trying to lower them or not. The Fed is kind of behind the curve in this case, right? So what are the conclusions? Well, first of all, we're currently in an asset melt-up, which basically means hard assets are going up. Real estate is going up. I don't know, it may end tomorrow, but it sure seems like everything's still in place the same way it's been for the last 5 years. And that's why we've been having this asset melt up. And I think it's going to continue. So stocks, mutual funds, Bitcoin, gold, silver, real estate, all these things are going to continue to go up in price, not necessarily in value, but up in price. So we have a melt up going on. Nobody is talking about the debt, right? We might be talking about slashing some government programs or things like that here and there, but nobody's really talking about how much extra debt we're printing. And now we have to print a lot of debt just to pay off the prior debt, just to pay off interest on the prior debt. It's a debt spiral, and that's bad for the country. It's bad for the economy. It's actually bad for the world. The debt is rising, and that's going to be more money printing. So don't think that they're going to be cutting down on money printing. The money printing is going to continue, and that's good for assets, and that's good for us if we're in assets. More money printing equals more inflation. So get ready, because there's going to be more inflation. You think we had a lot of inflation over the last couple of years? You ain't seen nothing yet. It's really coming, right? And I did a whole video on this a couple months ago about what inflation really is. The government's trying to shoot for 2 to 3%. Inflation is like 4 or 5 times that. Inflation's around 11.1%. You've got to beat 11.1% just to stay even. Otherwise, your money is going to just erode away, as it has been for the last 100 years. The Fed basically is screwed, right? They're insolvent, so they don't have any money to pay things other than printing the money. They used to have extra money, and that money would go to the Treasury. No more. The Fed is really screwed. They backed themselves in the corner, and they are basically insolvent. And some of the banks that are in the Fed system are insolvent as well. Don't worry, we'll print enough money to bail them all out, which is going to cost us money, but they're insolvent. They can't really raise rates on themselves, because when they raise rates, it raises rates on the new money that's getting printed, which costs even more money, which means they have to print more money to pay for that. So it's a spiral. You see how it goes? And then tax revenues are getting to be such a small part of what we do. Like, it's almost a nuisance. Taxes don't really cover what we're spending anymore. And so we have to continue to spend more money, print more money, give people more money. And that money comes into the economy and causes more inflation. It's like a spiral. There's no way out of it unless we slash spending by about 75% and start to pay off our debt. That's the only way we're going to do it, and we're not going to do that. So what does it mean to us? Okay, what can you do? First of all, you got to stay in assets. You can't figure that you're going to be in and out of the market. You're going to say, well, I'm waiting for the crash. There's a crash coming. But like they say, a stop clock is right twice a day, right? You can be right. There's been a couple of people that I follow that have been talking about a crash coming, the biggest one ever. They've been talking about it for 20 years, and it's never really come. Right? We've had some downs for sure. We've had some setbacks in the markets for sure, but we haven't had a crash that is, just significant and stays down forever. It always bounces back up somehow because of the Fed. Keep your house in order. Don't run up debt, right? Debt is like what you need to access when things are really rough. So keep your house in order so that you have access to that debt. Don't be running up your debt now. Be in cash flowing assets. Right? Be in appreciating assets. I have a program called the Cash Flow Machine. We try to get in assets that are appreciating in value, and we try to make cash flow on them while they are appreciating in value. It's kind of like buying a house and renting it to somebody. The value of the house, the price of the house is going up, but you're getting cash flow from the renter. You can do that in the stock market too. And I teach people how to do that every single day with my cash flow machine program. There are links in the description for that. Reduce your taxes now. Do what you can to start reducing your taxes because they're coming after your taxes, period. They need more money to pay for all this wasteful spending. And depending on what party you elect, you're going to be spending more taxes, right? They're going to be coming after that stuff. You're talking about crazy things coming after unrealized capital gains. Your house went up in value. We're just going to take 50% of it because it went up in value. That's crazy. That's crazy talk. There's lots of weird stuff going on right now in Washington. Be ready for the crash that may never come. I believe this crash is a melt-up crash. It's a crash in the value of your dollar. It's in the crash of your buying power. That's what it is. This crash in the markets may never come. I think we've got a crash in the markets coming too, but it's not the kind of crash that you think about and prepare for and, see people standing in the lines with, no food. I just think that there's going to be a rolling crash. Different things are going to be kind of going down and then they're going to go back up because the asset money is going into it. So I hope that helps you understand that you have to navigate what's going on in the market. I'm trying to educate you on this channel to teach you, it's not just about buying the right stock and, getting income. It's about knowing what the macro market is for you and your household and your family. So I hope that helps. And I'll see you on the next video. Take care.